Ja, hallo, hier ist Michael Adams. Ich bin immer noch in Vancouver für den Stock-Telegraph. Ich hatte ja in München mit Canarc ein Interview geführt und ja, es hat sich was getan und deswegen habe ich jetzt die Gelegenheit genutzt mit dem Catalin Chiloflischi. Right?
Right.
I made it finally. That's our running gag. Ja, also da gab es jetzt ein Update und da habe ich jetzt die Gelegenheit genutzt, mit ihm nochmal zu sprechen. So, Catalin, thanks for again taking the time to talk to me. And yeah, last time we touched base and did a video interview in Munich. That was beginning of November.
Sure.
And since then, you made a good development within the company. You released a PA.
Yeah.
So, and that's of course something which my readers, my viewers, and I'm interested in. So, tell us about what you achieved the last couple of months.
Thanks for taking the time to come to see us in Vancouver.
Yeah.
This time, which is great. So last time we spoke was late last year, and we were really working hard on finishing up an economic plan on the project. And few days ago, at the beginning of middle of January, we've announced the results of preliminary economic assessments on the project,
right?
Which puts the project basically in a very attractive point right now. You know, we are one of those few projects, or probably the only project I would dare to say, that can produce new projects that can produce 1 ounce of gold at about $600 all-in costs.
Okay.
We will be expecting to produce about just under 20,000 ounces of gold equivalent a year, mostly gold.
Okay.
We have a project with about 7-year mine life.
70.
7 0. So
7 0.
Just seven.
Wow.
7-year mine life. And the resource that we've published is about 2/3 of it indicated, so that provides investors a higher degree of confidence, of course. And we can do all that with about $7 million of capital, which is great. We expect to be in production about 6 to 9 months. Just to remind your investors and your viewers that both the project and the mill we have access to, they are fully permitted.
Right.
So, you know, this is just a matter of securing the funding and get going.
Right.
Very recently, we've hired a very experienced general manager in Mexico. He's now running our Mexican operation.
Okay.
He is the general manager of a mine that's known. It's called La Negra mine in Mexico, in Querétaro state. It's a very, very low-cost mine in Mexico.
Is La Negra the one which was owned by Orcana?
Exactly.
Oh, okay. So you're familiar with that man too, right?
We are familiar with that man too. I'm familiar. I worked with him for about 2.5 years.
Right.
And this is the beauty. I mean, in this market, we got to pick from the best. And you know, the reason why he became available is because, unfortunately, that project is now owned by the bankers. That loan that was done by Orcana, which put the company down, basically, didn't go well. And then the lenders now own the project, and in that process, a lot of people were let go, including the general manager.
Right.
And the general manager is the guy that's built that project from an 800-ton-a-day care and maintenance operation to a 3,300-ton-a-day operation, all within 8 years and organically. There was no money invested outside of what the project has generated in that. So it's a very good track record. And we are fortunate now that he's going to be leading our mine in Mexico.
Yeah, I agree. So I was following Orcana for a couple of years, and it was, at least at that point in time, it was a great success, right? But then, with the finances, in this market environment, you can't even really blame them. So at that point in time, when they made the decision, it was probably smart, but the market didn't help them. So you mentioned that you need like 7 million.
Yes.
So how are you going to proceed with this? And second question. The development of the US dollar, how does that impact you and your
for sure, both good questions. I think, you know, going back to the financing, we are in discussions as we speak right now with a series of groups that would be looking at the project-based financing. So basically the financing will be supported by the cash that the project generates.
Okay.
We will probably do a small equity offering, but for a small portion of it.
Okay.
Just to give, you know, some shareholders a good entry point, I think, but we are mindful about dilution, so we can't actually raise so much equity to pay for the project.
Right.
The good thing is,
especially not in this market.
Not in this market, and not even in a better market, because the amount of dilution would be huge, and because we have a robust project, we can get the project financed.
That's right, but in a better market, the share price right now would be way higher. Exactly. So then the dilution would be lower, right?
Then,
but again,
and that's also the time when you could repay back the loan, right? If that happens, it's a good problem to have, because then you do an equity offering, you close your debt, right?
Yeah.
So it's all good, and I think that's a very unique company, and I think that's a company that's now positioned well for this market.
Right. And the impact of the US dollar development?
The impact on the US dollar is actually beneficial to the project, because we have all the costs in Mexican pesos.
Right.
Mexican pesos actually was slowly devaluating against the US dollar, as was the Canadian dollar and the Australian dollar, and we have revenues in US dollars.
Right.
So even though Mexico is known to be a low-cost environment for mining, it's actually now even lower.
Right. And are you planning on using diesel or fuel, or will you use electricity? Because I was told that even the price for electricity came way down in pesos. Yeah,
it's actually electricity. I mean, the project, for those people that don't know what the project is, it's just outside of the city of Zacatecas. City of Zacatecas is a very beautiful city in Mexico. It's a UNESCO site. The Europeans love it. It's really gorgeous. The whole city, it's about 100,000 people, and it's built on mining.
Okay.
That's the state where you have the largest mining companies in Mexico operating. Peñoles, Fresnillo, First Majestic, Max Silver, all of them are there. Okay. It's the best location for mining. And as a result of that, you have power, water, infrastructure within your reach. Yeah, sure. You know, we will have electricity coming from the city, basically, right?
Oh, that's great.
So, and it's a good cost. I mean, it's a low cost of electricity. We're paying probably in the range of 6 to 7 cents per kilowatt hour, which is great.
Okay. And when we were preparing for this meeting, you told me that tomorrow you're going to Mexico. So you go to the project, and I was told you take an investor or a couple of investors with you to show off the project. But what else are you going to do down there?
For sure. I mean, I'll be heading out to Mexico for the rest of this week, so we'll be there for about 4 or 5 days. We also have a group of investors coming to see the project for due diligence and you know, just to get familiar with the project. We are also in discussions with the government to formally sign the contract. You know, right now we have a commitment from the government to enter into a lease agreement, and there is an official meeting which was held in Mexico where the lease was approved to be granted to us. We are in the final stages to sign the final piece of paper, basically, to get it all done, right?
Okay, so sounds you're going down not for vacation, as I was thinking, looking at the Vancouver weather, so it's real work. Okay.
Yeah, it's real work, and it's not by the sea, it's not by the beach, for sure.
Perfect. Thank you so much. Have a safe trip, and we should touch base at PDAC, which is coming up in a little bit more than a month.
Pleased to do so.
Thank you.
Thank you.